when you know you're going to lose 99% of your wealth, at some point you got to take a risk, right? That drives the exodus. Tesla had gone and bought $10 billion or $20 billion worth of Bitcoin. It'd be worth $100 billion right now, right? If Apple Computer did it and they started, what would happen to Bitcoin if Apple said, we're going to basically sweep all of our Apple cash flows into Bitcoin? Okay, well, Bitcoin would go up by a factor of 4. Mm-hmm. Apple would end up making $500 billion. Their stock would go up by $1 trillion. So anybody can do this at any scale. But now what happens if the Emiratis do it or the Saudis do it? It would be worth $1 trillion to them if they adopted as a reserve asset where they sweep their treasury reserves into this hard currency, if you will, or hard money. We'll call it hard money. Currencies are going to be the province of nation states, and that's always going to be political. But what you can't dispute is if you've exported $100 billion worth of products, services, or commodities for your country, and if you trade that for Argentine pesos or bolivars, it's pretty obvious, right? You exported $100 billion worth of good stuff, and you end up with $100 billion of paper going to zero. I think if you look at the environment right now, there's a massive demand for two things. Cryptocurrency in the form of a stable coin. If I have crypto dollars sitting on a network and I can grab $1 million and move it at the speed of light, and I can do it without generating a taxable event, then that's very interesting as a payment rail, as like call it your checking account. And then crypto property, my savings account. So Bitcoin is obviously the king of crypto property. If you look at where the action right now is, it's in the stable coins that are exploding, and you can see this very interesting market dynamic between Tether and Circle and UST and what Terra Labs is doing. And if I walk down the street and I ask people, everybody in Africa or Asia or whatever, would you like crypto dollars in the palm of your hand that the bank can't seize and the government won't take? And asked anybody in Syria or Afghanistan, they would say in a heartbeat, yes. Even in China, everybody in China wants crypto US dollars, right? Everybody wants dollars. It's not because dollars are a great long-term investment. It's because dollar is a much better short-term investment than every other currency on earth. And so there's a massive demand for that. And that technology has gone from like 5 billion to 200 billion in like 24 months. And so there's a lot of action there. I think that'll go to $1 trillion, Guy. I think it'll go to 5 trillion if the regulators, provide any kind of guidance. Inflation's an issue, and I figure the CPI is 8%, but the real inflation rate in assets is 15 to 20%. We know that all these currencies are weakening, right? Every Eastern European currency is weakening. The yen is weakening against the dollar. I mean, everybody is weakening, and the dollar is losing 20% of its value. So I think the macro environment says I got to find an inflation hedge. The political environment on one hand is a massive endorsement for digital assets by the White House last week when President Biden said 40 million Americans need digital assets and we're going to embrace this. And I think a massive advertisement for Bitcoin with the Ukrainian-Russian war, and especially the sanctions where we seize $300 billion worth of treasury assets from the Russians. I think the Chinese have $3 trillion worth of assets, and that might have got their attention. And probably pretty much the conclusion is, if you're any nation state in the world and you think you might ever be in conflict with another nation state, and you're holding their credit derivatives or their currency derivatives or their currency or gold in one of their banks, that's not really proper anymore. So I think that's got everybody scratching their head saying, I don't trust the currency as a long-term store of value, A, and I don't trust my assets to not be seized, B, what am I going to do? And then right in the middle of that, you see things like Bitcoin poking their head up saying, so you got 100x opportunity or addressable market from here under, even without considering inflation. By the time we get there, it'll probably be 200x. So I don't think we're too early. I think we're 1-2% into it if you look at it weighted. If you look at it from a time point of view, if you're an institutional investor, the first 10 years of a crypto network, you probably have to just sit and stare and see if it's going to break. So it was engineered, January 3rd, 2009, but you had to wait until about 2020 before you were sure it wasn't going to be hacked, banned, broken, copied. And so I think 10 years later, it starts to become interesting. We're year 2 of institutional adoption, right? Year 1 maybe started with MicroStrategy, bought $250 million of Bitcoin in August of 2020, and that runs about a year. Like we're 18 months into our journey here. So you're in the middle of year 2 of institutional adoption. There's 10 years of education, and in those 10 years, what happens at the end of year 1, well, Elon Musk gets involved, and then all of a sudden there's 24 Bitcoin miners that are publicly traded vehicles about now. There's another dozen companies probably come public. So you're watching the institutionalization of the asset class. We're waiting for guidance from the SEC, the FDIC. The executive order from the White House last week was a massive milestone. Biden's election was a massive milestone, but the executive order was a double massive milestone because that directed 18 agencies to figure this out. That'll be 24 months. By the end of the first Biden administration, I think we have 80% of the regulatory clarity that you need to understand this. That means that from the year 2024 to the year 2028, 80% has been figured out. And by the year 2030, maybe 90% has been figured out. And at that point, I think it's just kind of like a growth industry. I mean, it'll be a nice growth industry, 2030 to 2040. But right now we're in hyper growth, early stage, lots of questions, lots of people don't understand it. But I love that part because I think this is the stage. It's like 2011 Google stock or 2011 Amazon or Apple or Facebook. Just at the stage where it's kind of unstoppable. It's necessary. A reasonable objective person would say Google, Amazon, Apple, Facebook, they were all useful and necessary in the year 2012. And yet only, 95% of the people were underallocated. And then those things worked for the next 8 to 10 years. And then by the year 2021, every 21-year-old Uber driver, if you asked him, would have said, oh yeah, I own Facebook stock or I own Amazon stock, or they get in debates about whether Google's better than, Apple, and it's not really it's not that high growth stage anymore. It's that maturing, dominant monopoly stage where now you're just tied into the greater growth of the techno economy. So that's your situation. If you're a rational investor, you have to stampede to property. And now the debate is just what's the most desirable property? Is it land? Is it art? Is it sports teams? Is it gold? Is it Bitcoin? Is it some other crypto? Have you invented coal fusion, in the next Tesla? And are you going to buy that? And so that's the investor attitude. I don't see there's no political conviction or will or any likelihood that we're going to stop the expansion of the money supply. I mean, no one's expecting that. No one's even talking about that.